welcome back to this Crypto Saving Expert news show where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and today I am running through exactly what's going on in the markets. We've seen a little bit of a pump for the Bitcoin price, so let's discuss that. First of all, we are looking at the Crypto Saving Expert website and we can see Bitcoin is set at $22,140 and Ethereum is set at $1,550. So we have seen a slight move to the upside. I am one of those people that managed to buy the dip, so I'm very happy to see this morning. Let's take a look at the Bitcoin chart and see what is happening. Before we do, please don't forget to like and subscribe and press that bell notification button to help us grow the channel as much as possible. We can see here on the 1 hour chart, the indicators have started to look a little less favorable of the upside. In yesterday's stream, we could see they were all indicating that we should be seeing a move to the upside in the short term. That is exactly what we got, following some very interesting pieces of data coming out yesterday. So we will talk about that in today's live stream, looking at those inflation rates. Let's actually recap the price of Bitcoin at the end of today's stream instead, because the news has massively affected the price of Bitcoin over the last 24 hours. So it will all make more sense when we've taken a look at that first. So let's take a look first of all, of what we have about SBF. So we have the US court delays the SEC and the Commodities Futures Trading Commission cases against SBF until criminal trial. So we can see in this article here, I've just pulled up from Yahoo, that the Money Laundering Department of Justice has filed a suit against Sam Bankman-Fried back in December, and this was on about 6 different things. I don't know if they've listed it in this article. It was for like conspiracy of wire fraud, here they are, securities fraud, conspiracy, money laundering. So they have this huge case against him, and now a court in the United States has granted prosecutors' request to delay the SEC's and the CFTC's lawsuits against Sam Bankman-Fried until that first lawsuit is settled, because that will have impacts on the other 2 cases. So we are seeing some delays in this. According to a court filing on January the 28th, the Department of Justice asked to ban SBF from using encrypted messaging apps after the FTX founder reached out to Ryan Miller, the chief legal counsel at FTX.us, requesting an email in an attempt to influence his testimony at the court. So Judge Lewis Kaplan of the United States District Court obliged the DOJ's request and imposed more stringent rules on SBF bail conditions. He's now not allowed to use, VPNs as well, apparently, I read yesterday. So they are getting a little bit stricter with him. I mean, the fact that he's doing this and he's allowed to still be on bail is shocking. We can see here the US District Judge in Manhattan, Kevin Castle, has now approved the application, granting the motion to stay the civil proceedings without prejudice. Due to SBF's not guilty plea last month, the civil lawsuit against the FTX founder will be put on hold until the Department of Justice concludes its criminal trial in October. So the SEC and the CFTC filed separate lawsuits against SBF last year after the collapse of his crypto exchange, which ranked as the second largest digital asset trading platform after Binance. The SEC claimed that Sam Bankman-Fried defrauded FTX investors and deceived them into believing the exchange was one of the safest investment platforms. Now, we've all seen a lot about FTX in the news over the last couple of weeks. Let me make sure that we've got all of this tweeted over on Twitter before we continue. If you haven't already, please make sure to go to the pinned message in today's live chat and make sure to retweet that tweet to help us with the algorithm. We are looking at SBF being pushed back right now. I mean, I suspect that they are pushing this back, and by the time it actually gets to it, Sam Bankman-Fried will be old news, and he might get a less harsh sentence put on him because of that. We can see in yesterday's news that SBF, the courts in 2 jurisdictions trying to put all of their cases together, or the claimants were, because then they'd have a bigger case to be able to push more things onto him. And we'll see how this goes. This is still playing out. It's playing out much quicker than I expected, to be honest. But still, this is a long way to go if we're waiting till October for the first court case. But we will see. Very interesting things. I don't expect it to impact the markets too much anymore. It caused a huge effect on the markets at the time. We have recovered nicely, recovered those losses. Bitcoin is back above the price at which FTX collapsed on. And I just think it's old news now, so it won't impact the markets as much as it has done previously. But we can move on to the next piece of news here, and we have Solana-based NFT marketplace Magic Eden is laying off 22 employees. We have seen this over and over again in the cryptocurrency industry in the last couple of weeks. It's not nice to see, but we are seeing it as the markets are down. Those profits aren't coming in like they used to in the bull market. But hopefully this doesn't last too much longer, and we start to see that move to the upside in the markets, and we see the companies being able to continue to move forwards. Now, this is a huge issue within cryptocurrency because the markets move up, the demand for work increases massively. They need to hire those big teams. They need to get their big teams put together, and then the markets go down. And then work quietens down. There's not that demand for work. So the companies need to reorganize themselves and make sure they aren't making unnecessary losses. And that usually, in the last couple of weeks, has led to them getting rid of some of their staff. I'm sure as soon as the markets turn to the upside again, though, their demand for work is going to increase. They're going to have too much work for the number of staff they have. And they'll have to go on a hiring spree all over again. So the volatile markets don't just impact the price of the assets. They also impact the companies as well within the space. Something that we need to learn how to deal with correctly, because obviously this onboarding and offboarding wastes a huge amount of time within cryptocurrency companies, and it doesn't make anybody feel like they have a safe job when they enter the cryptocurrency space, and that's not what we want. We want people to enter the cryptocurrency space full time and feel secure, and we just can't have that right now because of the amount of layoffs that we are seeing right now. But let's move on to the next article we have. Let's leave this one to the end. We have here a study shows that crypto makes you more attractive since a Binance survey. Just throw that in there. Hope everybody had a lovely Valentine's Day. From 2,600 participants ranging from 18 to 46, 83% of people seeing liking crypto as an attractive feature in a partner, while nearly 1/3 of participants said they would be excited to go out on a date with someone interested in the emerging economy. Interesting article there, just thought I'd throw that one in there. Let's talk about the next article now. Before we do, please don't forget to like and subscribe and press that bell notification button so that you can stay up to date with the latest cryptocurrency news. We do these live streams every single weekday. Also, if you haven't already, make sure to go to cryptosavingexpert.com, press that nice big blue button up there, fill in your name, your email, set yourself a password, and don't forget as well to tick that button there. And then you will get our weekly newsletters that come out at 11 a.m. every single Tuesday, recapping the latest week in cryptocurrency and teaching you something new. There's always some little fun facts in there too, so don't miss out on those. Let's see what's happening here. Polkadot community members have proposed research into Polkadot's transition from security to software. So the Polkadot community members suggested studying token morphism, the technique announced in November 2022 by Web3 Foundation, which claimed that their 3 years of talks with the Securities and Exchange Commission resulted in the conversion of the protocol's native DOT token from security into software. There was much discussion over the legality of tokens recognized by regulatory organizations like the SEC in earlier rounds of Web3 between the years 2017 and 2018. These discussions have since diminished, and the last bull runs further. The requirement for regulatory recognition only really gained growth following the collapse of Luna and FTX. Now, regulatory bodies are looking with even more scrutinous eyes upon the sector. I mean, we've seen that within recent weeks. We've seen the SEC attack many different cryptocurrency exchanges, saying that staking makes it an unregistered security. It means it a security, so therefore means that Kraken and other centralized exchanges are offering unregistered securities. That's what we've been seeing in recent days. So now we're looking at this. Polkadot's efforts and eventual success in the regulatory arena in the context need examination and transmission to the larger Web3 community. According to their claims, the Polkadot blockchain's native digital asset DOT has transitioned and is no longer a security, which in a significant step forward, the fulfillment of the Web3 being considered software, not a security. Now, a new proposal has been made on the Polkadot Governance Forum, and this proposal aims to raise enough funding to help the community examine how Polkadot accomplished this status transition from security to software. And when the research is complete, Polkadot, Kusama, and larger crypto crypto community will receive guidance on token morphosyn within the proposed purple paper. This action is against increased regulatory scrutiny from the SEC and other regulators. This increased scrutiny has seen enforcement action this month against crypto exchange Kraken. We've just said about this. So the proposal aims to raise 14,776 DOT tokens for the research, and the money will be given in two payments, half and half, basically. And the community behind the purple paper also claims that several individuals who participated in Polkadot's conversion with the SEC will be among the team members, with an ad hoc subject matter experts also being covered by this financing. So they explained that the framework for the investment contract analysis of digital assets, I am just reading this right now, but we will discuss this in a minute, but this is very informative and something we all need to look at. We're trying to find guidance on the regulation of cryptocurrency, trying to make those lines clear, and this article does this perfectly. They explain that the framework for the investment contract analysis of digital assets, the framework was published by the Strategic Hub for Innovation and Financial Technology of the SEC in April 2019. According to the framework's contributing factors, nearly every digital asset offered and sold for fundraising reasons was likely to qualify as a security in the hands of initial buyers. So we saw this. This is the Howey test that this is discussing. The Howey test determines in the US whether something is a commodity or a security. If it's a security, it is regulated by the SEC. And the Howey test says something about how you earn interest or how you first release your tokens. If it's an ICO, with tokens released by ICO, it's very highly likely that the SEC are going to categorize it as a security. Interestingly, though, this has caused a huge amount of issues. Ethereum actually was released by an ICO originally. They've now said that Ethereum is not a security. Whether they change their mind on that in the future, I don't know. The Howey test really leaves it up to biased opinions. So that is a problem that we have. There's no clear lines. So we can see here, the framework, however, also contained elements that suggested the availability of a complaint course of action, allowing a digital asset that was first offered and sold as a security to be reassessed, a route that in some situations would permit a digital asset to cease to be a security under federal securities regulations in the US. The Web3 Foundation began raising funds in 2017 in accordance with US federal securities regulations. However, as of November 2019, they had yet to give any digital assets to the first purchasers. This was because the SEC's historic 21A report of investigation, the DAO, was published. Although the native token of the blockchain was not considered in the Polkadot vision to be a security, the team anticipated that the SEC's position was likely to be that the token would be a security, at least at the time of delivery. So they chose to attempt to accept the invitation to come in and chat with us from the FinHub staff of the SEC. According to the official statement, the Web3 Foundation's choice in November 2019 altered its course and resulted in changes to corporate operations, human resource management, and public relations. So despite Web3 Foundation claiming success in the token morph, it's important to mention that the SEC, the regulatory body, never confirmed the Web3 Foundation's claims, and also Web3 Foundation never showcased how they achieved their claims. So very interesting here to see that transition. We obviously have tokens that launch as ICOs, and this onto the SEC makes them a security, but making that become morph into something that is not a security is a very interesting thing to learn how we can do this within the space. Proposals to raise funds in order to do this research and understand how we can do this on a bigger scale is important. This is a very, very interesting article. I mean, we've spoke so much about regulation in recent weeks and how we need clarity on this and how we can move forward and how we need better regulation within the space. These regulations, the Howey test that decides if an asset is a security or a commodity, was actually created back in 1946, and now they're trying to put it on this new technology of blockchain technology. Just doesn't make sense for the industry. We need clarity on this. We need research into going into this and understanding how we can determine within the two and how we can allow the cryptocurrency sector to continue to grow within the US. If they still make it unclear, if we don't have this sort of research in place, it's just going to be forever difficult, and people will stop trying to create cryptocurrency companies within the US and just move to other jurisdictions, and the US will fall behind. It's as simple as that. Let's take a look at the next article here. We have Paxos disagrees with the SEC and says BUSD is not a security and will litigate if necessary. Don't forget to like today's stream and subscribe and press that bell notification button if you are enjoying it. We do these live streams every single weekday talking about the latest cryptocurrency news, keeping you up to date with what what is happening and taking a look at the cryptocurrency markets as well. If you haven't already, don't forget also to go over to our Twitter and follow us on there so you can get notified every single time we are going live. Now, this BUSD story is interesting. We've seen a lot about this in the last couple of days. BUSD stablecoin issued by Paxos, obviously marketed greatly by Binance, pushed onto many different centralized exchanges, become one of the top stablecoins within the cryptocurrency industry, and now the SEC have stopped the Paxos from minting any more tokens. So they are saying it is a security. Paxos has said they will go against the SEC. They disagree. The company have said Paxos categorically disagrees with the SEC staff about BUSD because BUSD is not a security under the federal securities laws. The stablecoin issuer clarified the Wells notice from the SEC only pertained to BUSD and excluded USDP and PAXG. So they've said the SEC Wells notice pertains only to BUSD. To be clear, there are unequivocally no other allegations against Paxos. Paxos has always prioritized the safety of its customers' assets. BUSD issued by Paxos is always backed one-to-one with US dollar denominated reserves, fully segregated and held in bankruptcy remote accounts. So a very interesting point here. We did see a fall in BNB because of these articles that were coming out about BUSD. Still seeing this being pushed onwards. We've also got another article about this here. We've seen CZ does not believe Circle reported Paxos and BUSD to New York regulators. So he stated this in a tweet where he said, "Ask me anything." Let's see if we've got a screenshot of the tweet in here. It's over here. Let's take a look at this. He said, in response to Bloomberg's earlier report that Circle reported BUSD to New York Defense CZ expressed in the AMA that he did not believe that Circle would do so because doing so would also hurt themselves, and Binance hopes to continue to cooperate with industry partners. We don't want to see people within the space turning against each other, so this is a positive news, I would definitely say. We are seeing here that people are saying that USDC are fighting head on with BUSD and saying that they are actually what caused this whole thing in the first place. I don't think so. It would negatively affect USDC. After all of these stable coins get grouped together, and if people are withdrawing their money from stable coins from BUSD, it also affects USDC, it also affects USDT. It affects all of the stable coins when negative news is coming out about them all. It's like algorithmic stable coins. When UST fell, all of the algorithmic stable coins saw a huge amount of withdrawals because people aren't interested in taking on that risk, especially within these markets right now. At this point in the markets, all of those people that weren't interested in cryptocurrency, I would say, have moved out of the space, 99% of them. So at this point, we're all people that are in the space for the long term. We understand the majority of the cryptocurrency information. If you don't, make sure to go to Crypto Saving Experts free courses and learn some more. But the people that have been are in the space right now understand what's going on in the markets, and they don't want to take on any more risks than they have to because they understand that it's a high chance that we will continue to the upside in the short term, in the long term. Sorry. Let's take a look at the next article now. We have Binance Huobi recovers $1.4 million in crypto stolen from Harmony Bridge. So this was stolen by North Korean hackers, and we can see here crypto exchange Binance and Huobi have frozen yet another $1 million in cryptocurrency stolen from Harmony blockchain bridge. So blockchain analytics firm Elliptic issued a report on Tuesday saying it provided the intelligence which enabled Binance and Huobi to suspend accounts and freeze $1.4 million in crypto assets connected to the Harmony attack. Today, money laundering was detected and stolen funds linked to North Korea were frozen in real time. As an industry, we have the power and responsibility to prevent digital assets becoming a haven for money launderers and sanctions evaders and ensure that they are a force for good. This is the opposite to the news we saw yesterday. In yesterday's news, we saw that a cryptocurrency hacker was accepting a bounty, therefore they get to keep some of the money, return the rest of the money, and it means they don't have any future actions against them. They won't have to have a lawsuit filed against them. They get to keep the money that they have kept to one side, and that's a much safer way to do this than rather than trying to launder the money in the wrong way. We have cryptocurrency exchanges right now. The issue is you can hack smart contracts if you are smart enough. You get that money, but changing that into fiat currency is incredibly difficult because all of these centralized exchanges work together as a team, as you can see here, to freeze those accounts to stop that money laundering taking place. So it's just a much easier and safer option to take that bounty. But let's move on to the next article here. Senator Elizabeth Warren to revive bill on crypto anti-money laundering. She wants to bring crypto under the same AML standards as financial institutions to combat criminal crimes. Warren made this known during the US Senate hearing on Tuesday, where she argued that the existing anti-money laundering rules do not adequately apply to crypto firms. Just in 1 year, crypto is the payment method of choice for international drug trafficking, who ranked in over $1 billion through crypto. North Korean hackers who stole $1.7 billion in funding that outfitted the nuclear program, and ransomware attackers who took in almost $500 million. So we are seeing here the two senators previously proposed a bill titled Digital Assets Anti-Money Laundering Act of 2022. And the bill sought to bring the crypto industry under the common sense rules that apply to financial institutions. The two senators proposed extending Banking Security Act responsibilities and know your customer requirements to a broader part of the crypto industry, including digital asset wallet providers, miners, and validators, amongst others. So trying to remove that transparency from the blockchain space. If reintroduced in the old form, the bill will prohibit financial institutions from using digital asset mixers and facilitating transactions with digital assets from anonymity enhancing tools. So this is what's going to happen here. We're going to see transparency try and be removed from the cryptocurrency space. This is what we are looking at here. We do need to see regulation within the cryptocurrency space, but again, this is a huge topic that needs to be discussed. They are trying to cover this more and more in the recent weeks following FTX's collapse, but regulating the space in the correct way is incredibly difficult. There's going to be a huge amount of different opinions out there. At the end of the day, we want to make sure that the cryptocurrency industry can continue to grow. We don't want to see benefits that cryptocurrency has being removed from the space. If there's regulations that mean it can't be transparent, it can't be decentralized, it can't be this, it can't be that, then it just becomes the same as the traditional markets, and that is not what we want. So we want to make sure it can continue to grow. It still has its benefits, and we can regulate it in the correct way, because we don't want to continue down this path where the SEC can just decide that they want to target this company, and no one knows who's next. We want to be able to regulate our companies in the correct way so that we can continue to grow, but we don't want that regulation to stifle growth at the same time. So interesting topics. I'm sure we'll hear much more about this in 2023. Let's talk about this final article we have here now, though. This is about US inflation, and we've seen a huge impact on the Bitcoin chart in the last couple of days. Let's talk about this. Before we do, please don't forget to like and subscribe and press that bell notification button so that you don't miss out on the latest cryptocurrency news and the latest market data, so that you know exactly what is happening. As I always say, listening to these live streams is one of the best ways to get into cryptocurrency. So if you have some friends that want to get involved in the space, just share them our live streams and they can listen to this. Listening to the news every single day is one of the best ways to get into the space, because I remember when I first started, and I felt like I was just drowning in information. I didn't understand what I was going to do to learn about the space. It was just a minefield. But just starting to learn about the news every single day means that you can understand how the markets react to specific pieces of data. And over time, you'll just pick up on the terminology that is being used, and you'll understand much more about the space. Let's take a look now at the next article and see what this is here. And this is Bitcoin dips after January US inflation comes in slightly higher than expected. Now, this article was written a little bit premature. We did see some volatility within the markets. So we can see here that according to the US Bureau of Labor Statistics, the monthly customer index rose by 0.5% in January after increasing by 0.1% in December. And it was actually estimated that the inflation would be risen by 0.4%. So this 0.5% was a little bit of a shock to the markets. Now, this inflation rise, usually things like statistics like this are priced in. We see this with the interest rates, we see this with the inflation rates. Usually it's priced in by the time the estimation is priced in. So now obviously this was higher than expected, causing all of the markets to be incredibly volatile. Let's take a look at how this affects the price of Bitcoin. As we always say, Bitcoin has that maximum supply. It has 21 million Bitcoin. It's never going to have more than that. So we don't have the same amount of inflation within Bitcoin, which is why people are turning to the miracle asset of Bitcoin. Let's take a look at this. You can see here that the news broke. We saw a huge amount of volatility. We have now moved to the upside. People in times of fear, so high inflation rates bring fear into the markets, into all the markets, not just Bitcoin. But in the long term, it makes people realize why we need digital assets. Inflation means people want to move out of their riskier assets because they want to try and hold on to as much money as possible. But it shows that holding on to the US dollar means your value is going to depreciate over time. Your purchasing power of your dollars is depreciating. We can even take a look at the DXY. I think someone mentioned that in the live chat earlier on in today's live stream. So let's take a look at that. Let's first check how many likes we've got on today's stream. Let's take a look at that. We are currently sat at, let's take a look, 2,515 subscribers on the channel. We are trying to get to 100,000 subscribers by the end of the year, and the year is going a lot faster than I anticipated. I can't believe it's already the 15th of June. We have 21 likes on today's stream, so please make sure to continue hitting that like button and subscribe and press that bell notification button and share us with your friends to help us grow as much as possible. We can see here on the weekly chart, we are in the green for this week. On the daily chart, we've seen a nice move to the upside. Davide said we need a bull run for 100k. Yes, let's try and get our channel to 100,000 subscribers before Bitcoin gets to 100,000 subscribers. That'd be good. I'm not sure if Bitcoin will get to 100,000 subscribers this year, maybe next year. But we no 100,000 subscribers, $100,000. But I would like to try and get the channel up there so we can get one of those nice big plaques from YouTube. Let's take a look at this. Let's take a look at the DXY and see what's happening. That is what we need to do. Over here, I got completely distracted by the live chat then. We can see on the daily chart, we saw a move to the upside for the DXY at the start of February. A lot of volatility yesterday. A bit of a move to the upside. So the DXY compares the US dollar to a basket of 6 other fiat currencies. When it's moving to the upside, it means it's strengthening. When it's moving to the downside, it means it's weakening. Obviously, we determine the price of Bitcoin against the US dollar. So when the DXY moves to the upside, it looks like Bitcoin's moving to the downside, but one Bitcoin is always equal to one Bitcoin. We can see here, we have had a double bottom. I mean, the second low was lower than the first. I like it when the second low is higher than the first, but here we are. We can see here we have this level here that was acting as a level of resistance during this dip at $22,000. So that been pounced and used as a support. Hopefully we hold on to that. That is what we are looking at right now. We are also facing another level of resistance here at $22,250. This is the range we are looking at right now. We have seen a slight move to the downside in recent weeks. Let's take a look at the fear and greed index to see what we have over there. We did see it at completely neutral yesterday. We were sat at 50. We can see now we are sat at, drumroll, 53. So a little bit more greed has entered the markets. Still pretty neutral though. Let's take a look at the Bitcoin chart. On the 4-hour chart, you can see the RSI is still neutral to overbought slightly. MACD is looking like we have bullish momentum, and we have the same for the 2-hour chart. And the 1-hour chart is looking like we are about to tick into bullish momentum for the MACD. So very interesting. If we break through that level of resistance, could be pretty nice for Bitcoin. As I've been saying, when we were at these higher prices, if we looked at the daily chart, we were just completely moving to the upside. So I'm feeling a little bit of a sigh of relief that we've come back down, tested some of those levels of previous support, checking we have supports within the market still, and consolidating at these lower levels. We want to build as many levels of support as possible at these price points so that when we move to the upside in the next bull run, or over the next move to the bullish trend, I should say, then we have these levels of supports below us. Because we always have pullbacks within the cryptocurrency space, and we want to make sure that we've consolidated along the way so those pullbacks aren't as horrible as they can be. We do see big pullbacks within bull markets. My trading strategy in the cryptocurrency markets is always dollar cost average in, dollar cost average out. I dollar cost averaged out at these points here, dollar cost averaged in at these points here. Now we're seeing the benefits of that immediately. I still have some stable coins on the side so that I can still invest if the price goes lower, and I have some exposure to the market so that I can take some profits if the price goes higher. So it's a win-win scenario and removes any fear or greed from my emotions and stops me from emotional trading, because that is a mistake I've made in the past and not one I would like to make again. But that is just my opinion. That is not financial advice, obviously. I think that is all we have for today's stream. So thank you very much for joining us today. We will be back tomorrow with more cryptocurrency news, more market analysis. So make sure to tune in if you haven't already. Go to our Twitter at CryptoSavingExp and make sure to follow us on there and put on your tweet notifications, because I do a tweet on there just before we're going to go live so that you don't miss and because sometimes YouTube doesn't notify you. So we do put out a tweet out on Twitter as well, just to remind everybody about these daily live streams. But that is all for today. Thank you very much for watching once again, and I will see you back here tomorrow with some very interesting news, I hope, and hopefully it's positive news about the Bitcoin price. See you